Welcome members. Welcome in group of Engage with Tech Market Analyst. I'm Sumant Parimal. I'm Chief Analyst of 5G Research. Today I'm going to make a presentation on the global fintech disruptions, how it's shaping up, and various market insights in this webinar. So while we are talking about the global perspective, but certain insights are also relevant for the regional perspective. And the fintech is one of the key leader in the technology sector. So, most of the IT revolutions actually started from financial services and banking and BFSI segments. So this is one of the key segment of market to be understood, to be analyzed, and to be tracked. So I take this opportunity again to welcome you all on my webinar. So how the structure of presentations today, we are dividing our presentation in 4 sections. So section 1 is devoted towards introduction of entire fintech market. Section 2 is regarding the digital transformations opportunity in financial sectors. And section 3 is talking about all fintech disruptions, specific market trends, and there's disruption opportunities. And the section 4 is regarding fintech market predictions. So here we'll be discussing the specific market predictions of present year and next few years. Okay. So with this structure, I want to proceed to my towards my first slide. If you see, let me define the markets segments, various market segments of fintech industry. If you see the one aspects of segmentation in this, so where the fintech market spans from banking, finance, lending, insurance to regulation functions which are performed digitally, mostly in online environment. That's a typical characteristics of various segments of fintech market, that it need to be enabled through digitally or other than online digital platform, or some kind of combination of online offline digital platforms. So if you see, there are segments like lending, regtech, personal finance, cryptos, now emerging area, payment and billings, in insurance, cap markets and wealth management, money transfer and remittances, there's pay orders, and mortgages and real estates. So that's the one view of the market segment. If you see the next view of the segmentation, so here basically firms providing customer services, firm providing value-added services, and the enabling firms providing technology support. So fintech firms that provide technology-based offerings to traditional firms, or other fintech firms that provide data mining services. So these are 3 types of firms we have categorized here, fintech firms. So first we talked about the firms providing customer services. Is basically the fintech firms that provides financial services to customer or help in distributing financial services offering. Okay, and the second category we discussed about the firm providing value-added services to customers, such as comparison of financial products, like online portals to compare insurance products. Okay, so, and the third category we discuss here, the firms who are typically the IT services kind of firms who are especially working for the financial sector. So these are the enabling firms providing technology support. So this is one perspective of segmentation of the fintech market, which further kind of can be projected into various subsegments here, like protections related solutions, the fintech companies which are offering the protection related solution, the fintech companies which are offering the personal finance management related solutions. So the fintech firms which are offering mobile payments, the fintech firms which are offering personalized digital experience like CX design and software, the design oriented thinking and all those kind of related with technology architecture. So next is the IoT based auto insurance pricing. So auto insurance pricing is the sector which is emerging very fast in the fintech. Personalized offers. Okay, so like financial, based on my financial relationships, they provide you insights what kind of instruments you should invest for. The bartering services, an online service where I can trade with others. So it's there's also emerging sector. Alternative currency, like many of you are dealing in the cryptocurrency or digital currencies, so those sectors are falling here. Mobile cash flow managers, so these all mobile based solutions. On demand payment services accessible to my mobile devices and uses fund in my account when available, and also seamlessly and immediately borrows when necessary to pay for purchase that exceeds my available funds. So next trend segment is your peer-to-peer lending, and so personal or business borrowing from individuals or group of investors rather than on bank. Robo advisors, so robo advisors are also emerging as fast, so where the like manual advisors, financial advisors are replaced by the computer models and algorithms and AI agents, which actually based on your portfolio and risk analysis, they remain advising you on what kind of instruments you should go for, invest for. The alternative trading scoring, so personal or business borrowing where lending decisions and pricings are partially based on alternative trading scoring mechanism. So these are one way of segmenting the market. So I have another perspective of market segmentation, so which are listed here. So it is like you can say the pure play technology side of the companies and the pure play financial side of the companies. So the technology side of the company are infrastructure providers seeking to help financial institutions digitize and modernize their technology stacks. Another variant of technology companies are large technology ecosystem using financial services to extend a relationship with exam. Okay, and then the pure play financial services players who are having some interest in technology offering also. So you can see here new entrants, startups and attackers seeking to enter financial services using new technology. So they are also using technology, but they are mostly coming from the financial services background, and rather the technology companies are mostly coming from the technological background, but they have the deep domain understanding of the financial sector. So that's why these four variants are described here. So the incumbent financials, so institutions making significant investment in technology to lift their games. So it is the big banking firms. Okay, so I have another one segmentation perspective here. So with segments on the technology stack. So these stacks are fintech stack, fintech, tech fin, insurance tech, reg tech, that is regulatory technology. Fintech is financial technology. So money transfers, payments, financial planning, saving, investments and borrowings, insurance, these all comes under fintech. Tech fins are fintech services offered by big tech firms like Google Pay. So wherever the big technology firms like Google, Facebook, or say Amazon, they are entering into fintech services. So they are separately categorized as tech fin companies. Of course, they are also offering the fintech services, but the sub-segmentation is tech fin here. So insurance tech, they are providing like insurance policies like pay-per-mile, car insurance, user-based insurance, peer-to-peer, life, property and casualty insurance, activity-based health insurance. Similarly, reg tech, regulatory tech. So now the financial sectors is mostly regulated, over-regulated rather, you can say. So for that also you need a lot of technology solutions. So those technology solutions are falling under this category, that is RegTech category, and some of the solutions are for AML, anti-money laundry services, and KYC, know your customer services, CFT, combating financial terrorism services, regulatory sandbox testing services. So these are some of the typical examples of segmentations of fintech markets. So now I'll come to next slide. If you see drivers of digital transformation in financial services, if you see 57% of millennials would change their bank for a better tech platform, and 65% of clients would consider leaving a firm if digital channels are not integrated. So the drivers are coming from the consumer end or customer end itself. Particularly the generational gaps are happening, and traditional banking is being challenged not by a small fintech startups, but rather by established tech giants leveraging their strong customer base, vast user data pool, agile technology platform, and deep funding pockets. So it's not like that from the day one startups are going to challenge the big banks like say Bank of America or say investment bankers, but it's rather the techfin companies, the biggies who are entering into the fintech market, technology biggies like Google, Amazon, Facebook. They are actually going to first give tough competition to the traditional bankers, as they are coming with very advanced technologies which are very, very disruptive. And they have the big funding pocket also, because they have built a good revenue stream through existing platform solutions. Some of them are e-commerce players, some of like Google's like search engine provider and cloud services providers. And at the same time, they have huge customer base, maybe bigger than the customer base of the existing banks. So these 3-4 factors are driving the balance in favor of the big tech firms to disrupt the traditional banking firms. And a few years back, nobody would have assumed that technology company will compete with the banking company, but now that is happening. Okay, so what are this survey will give you most valued fintech services by consumers. So of course, we have seen that many services are offered in the various market segments of fintech, but what services being actually most valued for the consumers, that is very much required before you launch your fintech solution in market. So if you see this consumer survey done by CGI, so if you see the protection is the protection related solutions are valued higher. That is, if somebody is you're protecting your risk, or somebody even protecting your financial transaction, that will be the highest value by the consumers. Then the personal finance management is the next one preference. Then mobile payments, then personalized digital experience, then IoT based automated insurance pricing. And 44% of the consumer prefers the personalized offers for the various insurance products or various financial instruments. 41% are for the trading services, 40% for the alternative currency like digital currency, like cryptocurrency. 39% consumers surveyed are for the mobile cash flow managers. So they are inclined towards adopting to the mobile cash flow manager based solutions. Then 34% are valuing the P2P lending. Of course, with the blockchain, the P2P lending will go up further. 31% of the survey consumers are actually valuing the robot-based advisory, and 30% are valuing the alternative credit scoring. And if you see awareness, so awareness graph is much more higher. So 83% of consumers are aware about the various types of protection solutions available in market. 63% are aware about the personal financial management solutions, and 94% are aware of the mobile payment solution, and most of them are almost 53% of them are using these services. So mobile payment is one of the highest used services by the end consumers. Okay, so if I go to the next slide, fintech drivers. What are the drivers of fintech? So drivers of fintechs are more agile due to absence of legacy system. So this is the one of the topmost drivers. So enhanced customer experience, new product development, innovation in existing products and services, cost reduction, improved data management. So these are some of the drivers for higher fintech digital solution adoption in financial services sector. Emerging digital technologies in fintech. If you see this slide, what are the prominent emerging technology in fintech sector? So let me first say data focused technologies. So the technology companies which are typically creating or evolving the solutions focused towards the various data issue in the financial sector. So these are termed as data focused technologies companies. So they are into solutions like analytics, artificial intelligence, and machine learning, sensor based technology, and biometrics. Similarly, you have the next category, operational excellence categories. So these are like process optimization and process improvement. So this essentially means the adoption of robotic process automations, chatbots. Chatbots are heavily integrated now in the financial services operations and banks operations also. So distributed ledger technology, DLT, and blockchain, these are also coming into the core banking processes and financial services process, insurance services processes. If you see the next enabling set of digital technology, then these are the front-end interfaces like all GUI, user experience design, all AR and VR, and you say conversational analytics. All this falls conversational AI. All this forms under this grade. So one more category I want to highlight here in infrastructural enablers. So the fintech technologies which are actually enabling the infrastructures like platform infrastructure or operating system infrastructure or computing infrastructure on cloud or the API, the application interfaces. So these are some of the emerging digital technology in fintech sector. So what is the most disrupted technology? So most disrupted technology is DLT, blockchain. So fintechs have been at the forefront of exploiting DLT potential and have not only come up with virtual currencies, but have also created innovative solutions for different industries, including financial services, such as banking, payments, insurance, and trade settlements to facilitate convenience, cheaper, real-time, and innovative of working. And the most important thing is the blockchain is going to enable a lot of decentralized application like peer-to-peer lending, peer-to-peer money transfers, which may also disrupt the existing banking system model where entire power is concentrated into few top banks, So DLT is disruptive technology. There no doubt the DLT is disrupting. Blockchain is disrupting in other sectors of industry also, like retail, supply chain. So apart from that, there are numerous use cases of blockchain into financial services and banking services sector also. Okay. So here is very important predictions about the digital transformation-led disruption happening in the financial services industry. As per the Gartner prediction, digitalization to make most financial firms irrelevant by 2030. So this prediction of Gartner said nearly 80% of heritage financial services firm, including the banks also, will go out of business, becomes commoditized or exist only formally but not competing effectively by 2030. So these firms will struggle for relevance as global digital platform, fintech companies, and other non-traditional players gain greater market share using technology to change the economics and business models of the industry. And if you see how the hype cycle of this transition or this disruption is coming out as per Gartner, the financial services industry critical inflection point will happen where this, if you see 80% of the existing big financial players will go into this area where they are falling. And if you see the fintechs, I mean those who left are 20% in the post-disruptive scenario. So in those 20% also, if you see there are three categories of the firms. So the firms which are that own a digital platform will use its scale, low-cost infrastructures, and customer information it generates to create new services, enter new market like Alibaba. They will be of the first category, like Power Law firms. So these are the 20% firms which are likely to survive the disruption or the likely to emerge a post-disruption scenario. But these 80% of firms are likely to get disrupted. So that's why we are calling in incumbent businesses. So the second categories of firms which are going to emerge post-disruptive scenario or going to survive this kind of disruptions are fintech firms. They will participate in digital platform but will not own them, you know. So the third categories of the firms which will emerge after this very disruption or survive the disruption is long tail firms. So some traditional providers to act as low-cost service broker enabled by digital platform, likely for large population of poor and working class. So of course, not all existing BFSI or banking and financial services players will die under that 80% ratio we have mentioned about, but some of them will remain surviving due to their proactive measures, due to their innovation, due to their aligning with the emerging disruption and emerging opportunity. So these third categories of firms are going to fall under 20% of the 20% of the company which are going to survive or we're going to see in the post-disruption scenario. So these are the last categories are the existing players which successfully transition or transform for the next level of innovation or next level of encashing the opportunity coming from the next levels of disruptions. So disruptions in financial services. So what are the disruptions we are talking about? So here, so financial services industry will change quickly and dramatically after digital business emerges from through to delisment. So if you see this through to this, so we are talking about these things, these curve. Okay. Millennials and other consumers do not like to use traditional banks for all services. So this is one of the big insights coming on. Fintechs alternative providers have capitalized on this opportunity to accelerate consumers lending and even corporate lending, starting with a small and mid-sized company. In some nations, conservative regulation will inhibit innovation, while other countries such as Australia, Brazil, China, and India, and UK will use the regulation to speed up transformations. Regulation like Revised Payment Services Directive PSD2 in Europe requires financial institutions to open up their back office processing system for integrating with fintechs to transform financial services delivery by fintech. So right now, the back offices of large banks are closed systems. They are not exposed to the other entity except to the extent of government regulatory compliance. So it is expected that post PSD2, some of the banks will open their back office processing system for integration with other fintech companies, so that a lot of data churning will happen, a lot of customer and business insights will be created. Those will be useful for further evolving the innovation in the financial service industry. So fintechs to focus on building digital ecosystem partnership, which will enable disruptors to rapidly scale and offer more diversified services to challenge incumbent. Fintechs to increase speed to market by 1x times while decreasing cost by 10x times. So when they grow 100%, then they at the same time they decrease the cost also by 10 times. Okay, so fintech to focus on analysis of customer data, including from social media, to deliver customized pricing, marketing, engagement, and targeted products and offers automatically. So AI based engines will automatically send the notification on offers to the target customers. Collaboration is one of the main theme will emerge in the post disruption scenario. So where fintech providers as well as the financial services providers like banks will going to collaborate. So they will collaborate more and more, and even the competitors will also collaborate more and more. Like in one of the last point we mentioned about how the back offices of various banks will get open for the fintech sector. So that means that is one type of collaboration. So collaboration will go up. Okay, so however, there are reasons why the traditional firms will face the disruption threat. As I mentioned in the previous Gartner prediction, that 80% of the existing financial services company may get totally disrupted. So these are going to happen because due to these regions. So because they lack, the traditional firms lacks of agility, their lack of willingness of partnering, then the cultural fit issues and regulatory burden, IT compatibility, products and services come a scale of business, terms of partnership, fears of losing control. And so these are some of the barriers due to which traditional banking service provider may not able to partner or collaborate with the fintech sector for the next level of innovation. Now, if I go to the next slide, this is another trend which says traditional banks' current level of engagement with fintech is insignificant, where only 25% banks are extensively exploring novel fintech products. So this is one of the discouraging trend. At the same time, it also shows the future opportunity, because right now 25% of banks are only engaging in some kind of fintech products. So there is a scope of reaching to other 75% the financial services providers for enhancing their digitally enabled services and products. A recent report reveals that 7% of legacy banks have set up fintech labs, and majority favored being passive investor in fintech startups. So these are led to the dominance of fintech company in personal banking sector. Microfinancing instruments like M-Pesa and Amazon Cash, as well as payment instruments like Alipay and Amazon Pay, are replacing credit cards and loans. Okay, so this is another prediction. Okay, now here I want to mention about, many of you must be knowing, or the Ant Financials, which happen to be the Alibaba outfit. So it's formerly it's one of the most innovative fintech company of the world, and Financial was formerly known as Alipay, and it's a spin-off of China's Alibaba and akin to PayPal in the US. And the organization has expanded beyond mobile wallet Alipay to include an online lending platform, MyBank, and investment fund Weiyubao. In June 2018, Ant Financials introduced the world's first cross-border remittance network based on blockchain. So they are very good in adopting the blockchain via a partnership between its Alipay HK brand and GC Cash. And it's offer real-time money transfer between Hong Kong and Philippines with lower fees than traditional transfer forms. So these are the earlier stage models coming on, which may challenge or disrupts the big financial firms, big banks, as per the prediction we shared in the previous slides. If you see top fintech trends, so here are some of the listings of top fintech trends. So high level of regional variations in fintech disruption. So we discuss there are regional regulations due to which the disruptions are different. The factors of disruptions are different, or drivers of disruptions are different for the different country and for the different region. AI is a meaningful evolution. So good execution and solid business models. So next trend is scrutiny of business fundamentals in increasing. Next trend is greater user experience is no longer enough. So great UX is now the normal, and ease of use and free stuff no longer equate to viable business model. Marketers now need to find more robust ways to differentiate themselves from incumbent. Incumbents can and do strike back. So retail banks have led the charges in upgrading digital experience, so match fintech in their core banking products. So it's not like that it's 100% sure that all financial service company like banks may fall behind the emerging fintech companies or the big tech companies. They can give challenge also, you know, if they are very going to be proactive. So more fintechs and incumbents are partnering. So this trend we have seen that many fintechs are now actively looking for partnership to grow their businesses. Infrastructure fintechs, that segment we discussed previously also, where potential is very high and sales cycles are long. And several CVS, the core banking system fintechs have emerged, and seeing legacy IT issue as a golden opportunity for disruptions. Now, if you see the investment trends in the fintech sector, so it is rising and rising and rising. So in 2018, the entire total investment activity, be in the venture capitalists, so P funds and M&A in fintech, it rose to 111.8 billion US dollars, and with highest of 2196 deals happened in the last year, you know. So this is the one perspective. The other perspective is fintech trends, how much the VC investment itself came. So if you see the last 4 quarters of the last year, so the topmost VC investment happened in the second quarter of the last year, where around 20 billion US dollars came through the VC route in the various fintech companies, and around 400 deals were made. Okay. So this is one of the insights for the capital invested. If you see the one trend here, the later VC investments have gone down, and subsequent years. This is the reason because now investors are mostly avoiding very risky investments. So they are looking for some kind of companies which have taken the early lead in establishing their revenue models. If you see global M&A, so global M&A activities have also gone up since last 1 year. If you see in the last 2018 year and the Q4, there were around more than 180 M&A global deal M&A have happened, and the funding came through the M&A where around 21 to 25 billion US dollars in some of the quarters. So if you see in the fourth quarter, it was the M&A investment was 23.4 billion US dollars, and similarly in first quarter also it was touching around the same figure. Fintech trends, cross-border M&A. So cross-border M&A is another factor to be tracked, and the cross-border M&A, the total funding this industry received was of 53.5 billion USD, and total 155 deals happened last year. So if you see insurtech investments, especially the insurtech investment, total investments has reached to 5.7 billion mark last year with a deal count of 242 deals. These are like segments of the fintech sector which we discuss under the total fintech investments. If you say regtech, then this is also a segment of fintech. So in regtech, total investment happened around 3.7%, and the total deal was 1.104. FinTech trends top global deals in 2018. So these are some of the top global deals, like Ant financing deal is also mentioned, which was the second largest deal. It got C series funding, and the first is ref in any type is 117 billion deal, and this was the buyout. Then WorldPay was 12.9 billion deal. It was another M&A. And then there are many deals like Verifone is also listed, which also buyout. Then iJetel was a M&A. Okay, so Iris Software Group also invested. Okay, so this was also buyout. FinTech trends investments in India is very India focused. So one of the headlines last year in India was Warren Buffett's investments into leading mobile payment platform Paytm to the tune of 300 million US dollar. So blockchain-led disruptions we discussed in previous slides also. So blockchain distributed ledger model has the potential to take steps, time, and cost out of financial flow. So financial intermediaries will be removed. So right now, today, you have a bank here or some of the large financial institution. So these will be replaced by peer-to-peer systems. So these nodes, you'll see blockchain nodes, nothing but one peer-to-peer. Okay, so they will communicate on themselves, and there is no need of a centralized organization like banks for dealing the various financial services or taking loans or taking payments. So they can directly deal through blockchain networks. So this is one of the major disruptions, disruptive power of the blockchain technologies. So further details of blockchain-led disruptions are the latest tech-enabled financial services supported by blockchain technology promises to disrupt the strategic position of financial institutions and pave the way of fintechs. So digital funding will also emerge via the ICO, initial coil funding. Okay, so these are some of the disruptions I mentioned here, which are happening through blockchain technology, and like a smart contract is another aspect. Okay, then the complementary of Swift is also in progress on Ethereum. Okay, so many things are happening in the fintech sector by using blockchain technology or Bitcoin or cryptocurrency. Okay, so this is a very depth subject, and one webinar can be conducted on this area itself. So I'm skipping it right now. This is a framework how the blockchain and fintech will interact with each other. So if you see FinTech ecosystem, so these are some of the ecosystems based on the some of the market segmentation we discussed in our previous slides. So like the financial advisory or robo advisory, you see number of companies who are offering solutions, fintech companies who are offering solution in this space. Similarly, regulatory tech, if you see, these are the company offering solutions in regulatory technology, and digital banking and payments and remittances. So these are the companies, So these are a lot of fintech within various segments of fintech. So blockchain-based solutions you can see here. Here there are some list of the companies which are offering or protocols which are offerings, and so insurance techs also you have. These are the players, prominent players. So alternative finance is also, there are prominent players listed here. Identity management, digital identity management, these are some of the players listed here. So in a nutshell, you'll get an overall look of how the various segments of the FinTech ecosystem is organized, and who are the players who dominate it. So financial industry predictions. So what are the next levels of predictions? So one prediction I already discussed, that by 2030, 80% of heritage financial firms will go out of business as per the Gartner. Digital disruption will force CIO in financial services firm to accelerate digital transformation. Digital ecosystem partnership will enable disruption to rapidly scale and to offer more diversified services to challenge incumbent. Established financial services providers will have to move faster on digital business by building digital platforms or finding niche products and services to sell on other platforms. 71% of financial services CEO believe that their nation can compete in a digital world without changing their business model. So it's here the contradiction. As per analysts, 80% of the existing financial firms are going to die or get disrupted by 2030. But on contrary, 71% of the CEO of those financial firms believe that they are going to survive and they are going to compete with the digital world without doing any major change in their business model. So here is the inertia of the industry, so which is very dangerous. So this will become a reason for their disruption, the extinction. Now, this kind of 5% denial by CEOs in the matter of digital disruption further increases the risk of firms to get disrupted. That's what we are talking about. Another topic, fintech disruptions or consolidation will happen. So we will see increasing levels of consolidation in mature areas such as payments and lending, as well as in emerging areas like blockchain. So deal size will emerge bigger and bigger. Bigger deal size you have, the deal size is expected to continue to grow as investors focus on later stage fintechs with a proven track record in effort to reduce risk. Global expansion will remain happening. The challenges, banks will continue to grow their services offering and expand across international borders. Open banking, regulations around open banking will prove to be boon for technology giants and startups and increase player role in financial services. Blockchain, there will be a dramatic increase in levels of investment in companies dedicated to building specific production solution based on blockchain technology. Insurance tech accelerates, that will also go up. Asia will see substantial growth in insurance tech investment. US and Europe-based traditional insurance are looking to use Asia to test alternative insurance offerings. Regulatory tech also is going to rise. The investment in RegTech will accelerate as startups focus on helping incumbent financial institutions reducing costs associated with complying with new stringent regulation. Collaboration in Asia, collaboration between fintech and banks in Asia is expected to continue to grow, particularly in areas like KYC, AML, digital identity management. Digital banking, traditional bank and corporates will increasingly expand into digital banking, introducing nimble channel digital bank that operate independently and do not rely on their existing legacy systems. So these are some of the major fintech predictions I have to give. Now I want to quickly browse you through what's the next phase of fintech. Right now we are at the FinTech 2.0 and in the next few years we are going to be in FinTech 3.0. FinTech 3.0 starts around now and will play through 2025. So year 2025 will see the major waves of FinTech 3.0. So here, if you see all the previous predictions, what we discussed, those are going to happen in these periods of FinTech 3.0. And if you see major consolidation happening across alternative payments players, P2P payments, e-commerce, alternative lendings, card networks, so they are coming under a consolidated umbrella. So consolidation is the theme of FinTech 3.1, and consolidation will occur across FinTech vertical as acquisition rationale becomes increasingly driven by strategic positioning, not financial richness. FinTech 3.0 and its predictions. So here are prediction: platform as a service, futuristics, open banking, share API, corrections and innovation, leverage technology and data to create value of its cross-border alliance members, so group customers and business apply machine learning and B2C and B2B, provide integrated redundant financial services. scale of operations and openness in FinTech 3.0 companies will make a small FinTech companies to become satellite operators of the giants such as Baidu, Alibaba, Tencent, JD.com. And FinTech 3.0 will bring together many players across different marketplaces, gravitating towards giant players, forming different planetary ecosystem governed by openness, integration, and technology like API sharing and cloud and AI, ML, and blockchain and big data. So you have a satellite and hub system here. So big tech like Alibaba, Baidu, they will become hub of the FinTech ecosystem, and across that bigger companies platform or solution framework, the smaller startup FinTech will emerge, and they will rotate across those platform of the biggies. So with this, we are coming towards the end of this presentation, and I'm hoping that this presentation should have given a very broad outlook to the emerging trends of the FinTech sectors, how the disruptions are coming in the FinTech sectors. And if you are working in the FinTech sector, you need to find your strategic positioning, and particularly aligning with the big players or big tech players like Amazon and Google and the Baidu, Alibaba. So you have to work on your strategy. You have to dig further. You have to research further. And for any help in the market intelligence research or the market insights, you can feel free to contact me. Here are my contact coordinates. My email ID is sumant_parimal@innogress.com, and my mobile numbers are also shared here. You can connect me in the LinkedIn also. You can ping from there also, and I'll love to help you out, and hope this session be useful to you, and I love to interact with you guys again in the next series of seminars. And till that time, I say bye to you, and best of luck in your effort, and thanks again for joining my webinar and watching this series. Thank you.